Yeah, I was gonna say that it's just clean, you know.
All right. Good evening, good morning, good afternoon. Welcome to the Inner Circle Live Asian session. I'm your host for tonight's session, Benny Allen, along with my awesome partner, Mr. Ryan Carthage. And we're so happy and grateful for each and every one of you being here with us this evening as we take a look at the technicals and the fundamentals to see what we can take advantage of in the Forex market. So without further ado, let's make sure that we turn off any and all distractions, grab a pen and paper, take lots of notes, and let's make sure that we participate and engage. So if everybody can hear me loud and clear, please drop me one in the chat and we can get this session going. Good evening, everybody. All right, so, right, I think we are all set. Everybody's ready to go. I see all the ones, appreciate it. So, Ryan, how are you, sir, this evening?
I'm doing well, bro. Doing well. Glad to be here. How are you?
I'm doing great. Glad to be here as well. Market's rocking and rolling. Elections, CPI tomorrow, everybody. That is the only thing that the market seemed to be watching all of the articles today. It was quite fascinating reading through them, listening to Bloomberg, radio, trying to get, a beat on what's going on. And it's just all eyes focused on the CPI tomorrow at 8:30 a.m. That's going to tell the tale whether we're looking at 50 basis points for December or 75. That's what everybody's saying. So we shall see. All right. So, whew, big one tomorrow. Big one. Ryan, what do you think? Have you read anything?
I haven't had a chance to read anything just yet, man. While we're going through, I'm gonna do some quick searching and see what I can find and get a feel for it. So I'll let you know in a little bit.
Yeah, absolutely. But hey, it's the stock markets, right? Taking that hit. Now we're looking at here as we move into the Asian session. Earlier was the U.S. stock market. Now I was looking at the Asian stocks fall ahead of U.S. inflation data. European stocks close slightly lower. U.S. futures flat ahead of inflation data. Crypto sell-off continues. Look at this, U.S. mortgage applications fall for the 7th week. Okay, we know that's coming. We know that's a main indicator of tightening because they're raising interest rates, right? So we will see. We'll see. Some I see some reports that are saying that it may come in slightly lower, but not enough to avoid another 75 basis point hike. Is what people are projecting. So different opinions across the board. But as we've been saying for weeks now, we haven't seen a lot of data points that would reflect the Fed's making any type of pivot, and they haven't. So tomorrow should be interesting. All right, see the market move. We want the volatility, and I think we may get it tomorrow. So that's where we are on that. So again, taking a quick look at that Forex calendar. You've got the Bank of Canada governor speaking tomorrow, but all eyes are on the CPI report. That's going to be the big mover for today. On Friday, we got GDP coming out month over month for the UK. So we'll see how that comes out as well. All right. Any questions regarding the fundamentals and what's been going on today and what's going to happen tomorrow with the CPI report? No. All right, so we click over to investing.com, all right? Just kind of more the same. Stock market today, Dow dives on tight midterms ahead of inflation data. Big day tomorrow. All right, can't say it enough. Dollar advances ahead of inflation data, cryptos crumble. So let's go ahead and take a look at the charts. Look at the dollar index. We can see that daily level, support level is holding again, right? So we had a bullish day on the dollar, and now we're into the Asian session. And so again, all eyes set on tomorrow. So that is the dollar on the daily. We come down, we take a look at the 4-hour. You can see again, we've come into that zone and price reacted to the upside. The bulls took over to hold that level. So that's the US dollar. Since we've been talking about cryptos, we'll take a look at that Bitcoin. We posted the chart today. And this is one we've been eyeing for quite some time. This setup has just been sitting here, and finally the 17,773 level broke, clearing the path through a potential move on down, right, to that D extension. So we'll see. We'll see. Crypto has just continued to slide to the downside. All right. So if you're short, you're good. If you've been long and holding crypto, it's a lot of pain, right? A lot of pain right now in the short term. So we'll continue to see how that moves along. If we come down and we look at Ethereum, okay, so we can see for quite a while, right? This chart's just been sitting here and it's been moving to the downside. I can't even remember when we marked this up. It's been a long time ago. Got the pullback on the daily, and it's just been steadily declining. Okay, you're looking at that potentially going back under 1,000 on Ethereum. The extension is at 720. Right. What's that song? It was all good just a week ago. Back in the day, not anymore. Not anymore. But that's going to be some opportunity there when this finally decides to bottom out. So if you missed it the first time, there's some opportunities that may be coming your way on crypto if you're buying and holding. All right. So we'll scroll down. Let's take a look at silver. Okay. That's the 1-hour chart on silver. We're right in the 80-20 zone there. Okay, so keep your eye on that if we have any silver traders. If we move up to top of the zone, right, we see we went bullish right into these levels. And we're trying to form a high on the daily here. Okay. Going down to the 4. Everything on 4. Right in that sweet spot on the 4. Okay. So we'll see if that breaks back below that 2084 level. We should see that move tomorrow. Okay, and then back to your 1 hour, 80-20. And there's that 2084 again. If we break below that, we may be headed back to that 382. Or even lower. Questions?
Nope.
All right, appreciate it. Okay, let's take a look at gold.
No questions so far.
Thank you. Thank you. So gold, right, kind of just bouncing around. You almost came right back to this level when double topped, almost. All right. We'll see gold move tomorrow. Definitely. We'll see it make some type of move tomorrow based on how that CPI report comes out. All right. So here we are. We're just sitting here on the 4 hour. It's a really nice zone. Okay. So keep that one on your radar. Okay. We're in the sell zone there. We'll see how it reacts. Huge move to the upside here, and then you got the consolidation to follow. Finding some equilibrium, that makes sense, right? Huge bullish candle, and now we've got that tight consolidation there. So we need a breakout. We need a breakout, and tomorrow that report will probably be a catalyst for it. All right. So that's gold. Crude posted a 5-minute on it, but I don't think it ever gave good confirmation to take off. That one missed then it reversed. It moved down pretty aggressively. So we hit the 80-20 zone here. This was that call in the Telegram. We didn't get anything. We didn't get a trend line break, cloud break, nothing. It just hit the zone and then it continued down. So the bears kept control of that today. Then we got a new AB boundary and it reversed. Didn't get to that. But now here's your latest move here on the 5-minute where the AB boundary was just moving sideways. If it pushes down to that 118, 127 zone, I'd entertain it again with proper confirmation, right? We need a trend line break, need a low to form in that zone, a trend line break, cloud break, however you want to play it. But that's where I'll be looking for an opportunity. Okay. Other than that, if it turns to give us a high price, won't play it around the data tomorrow, but we'll see afterwards. We'll see where it's sitting afterwards. Because if you get the CPI data to come out, and that CPI data from October is still strong, and we get the speculation with that rate hike at 75 basis points, you may see demand fears kick in, right? So you may see that oil price drop off. So we'll keep a close eye on it. So that's where we are. Let me get out to the higher time frames, right? So this crown, right, is on the verge of failing. It's on the verge of failing here, right? So we didn't take that right tip out yet. We got a good move to the upside, but we rejected at 93. We've been moving down ever since. All right, so we may be headed back to this 82 level there. All right, it's a good move initially, then boom, straight down. So we'll see. We'll see tomorrow. That's from your daily time frame. Stochastic is coming out of the sell zone, so it's gonna be interesting, right? This just might be one big range for a while, but we shall see. Oil is definitely fundamentals driven. Any questions on oil? I turn right back over.
No, sir.
All right.
Be interesting.
Yeah, it is going to be. It is going to be. It has some good momentum to the upside, but it's been so back and forth. It's a nice ride earlier in the year. That ride to the upside was huge, but ever since then, it's kind of been back and forth. We had a question. I'm sorry.
Yeah, I was just going to ask, US oil, does that run in correlation with the CAD yen? Or is it the CAD US dollar?
The CAD yen? Yeah, well, you got the UCAD and the CAD. It's just a Canadian currency, period, right? Because your major commodity for Canada is oil.
Mm-hmm.
Right. So you do have the CAD affected by your oil prices for sure. Mm-hmm.
Right.
So that's gonna be across the board.
Across the board. Okay. So then with that being said, after looking at this, do you think, well, I even think, would you say that oil has a price range as well as other commodities?
Say that again.
Do you reckon, looking at oil, that it has a price range like other commodities as well, such as gold?
Yeah, it's in a range now.
Yeah.
Right. So it's in a range now. So it seems to be right here in this area between that 85.72 and that 93 right here.
Mm-hmm.
See it in this zone right here. It seems to be hovering. So we're right back down to that price. But we definitely can't catch a continuing trend right now. You see how it rejected here at 93, and then it's pushed right back down to this 85.72. I have to read up. I have to read up. I have to read up OPEC and seeing, because there are certain price levels that they do not want it to fall below.
Mm.
Typically they'll have an idea in mind on where they don't want certain price to fall below. They'll let it go as high as the United States, other countries may have an idea on the high end, but OPEC's not necessarily gonna care about that. But as far as a floor, I know I have to read up on the articles that they have a level as a floor that they don't want to see oil go below.
Right.
Gotcha. Because what they'll do, they'll cut production.
Mm-hmm.
You know how that goes. So back and forth, the cartel, as they say. So we'll continue to see here at this level. See how it's been kind of respecting that zone right there.
Mm-hmm.
Straight across here. Right. And we're not getting a breakout. But that, as you get more and more recession fears, people, and then also too, You get it with the anytime like with China and the lockdown because they got a huge economy. Anytime they go with the back and forth over the coronavirus and the lockdowns, and another major city gets locked down, you can see things fluctuate because people fear demand.
That's right.
So this is why look at this. Look how this has been. There was a ride to the upside that traders took this year. It was a phenomenal move to the upside. And then it collapsed, and it's kind of been trapped in a range ever since. But that's a good question. I do want to read up on that because typically I'll know, but I haven't read about it recently. What that floor is, because sometimes that can help you pinpoint, like, well, here's the floor, right? You might get some price action to the upside from here.
That's the word. That's the word I was looking for. The term price action. Sorry.
Yeah, for sure. Because if they have that floor in mind, when it hits that level, typically you will see a reaction. I just don't know what it is right now in the current time. Yep. Yeah.
Thank you.
Very cool. You're welcome. Any other questions on this oil? Right. So we'll see. Right. We saw how this price moved down, but then you come here and you look at the UCAT, right? And you can even go to the 5 minute because it was a beautiful swing on a 5. So on the 4, you can see this bounce, right? So it's the opposite. Okay, see how I formed that low, and then we got that push up back up above 135. All right, so right back up around above 135 has been whipping all over the place. But on your 5, look at the swing. See? All right, so you got some dollar strength as support. Okay, on the DXY. Okay, we see support held again. Then you come back to the UCAT, you see the oil price fall off, right? And you've got that swing there. Okay, beautiful swing. Got around that 118 zone, and then we got the swing back to the upside on that. Okay, so it was a nice 5 minute swing. And then here, see the bounce. This is really just, you can't look at this. That's just ranging. See that? And now see that breakout, see how it broke down below 135, and now, right, you take your fibs off, you're right back in the range. And so US dollar pair, it'll react to the CPI data tomorrow. It'll definitely react. Okay, news comes out strong for the dollar, of course. That's your base currency in the pair. It'll continue to drive right back up. Okay, so we'll see, right? It's always the initial reaction, right? The emotional reaction from the number. Then you start to see the market calm down a bit, and then you kind of see some normalized price action once investors get their heads wrapped around all of the nitty-gritty details of the data. Where are we seeing, right? What sectors? Where are we seeing the heavy inflation? Where is it coming from? Is it coming from housing? Is it coming from rents? Rents have been going up, skyrocketing, right? Which makes sense. Okay, mortgage interest rates are going up. You got less home buyers, people looking to rent, not buying homes. The demand is there, price goes up. So that was one of the areas the last time. So we'll see where that pressure is really heavy when we break down that report tomorrow. So that's the UCAT. But in the meantime, right, while the market bounces around, you can always go through your lower time frames and find the swings. Okay, fibs will take you there to those sweet spot zones. Then you can play those reversals. So out of that zone, what is that? 150 pips or so. That's on a 5 minute chart. Okay, 75 or so. 115, 61.8. So that's the UCAT. Any questions?
Yeah, I've got one question.
Sure.
Yes. So to US dollar and CAD, pretty much neighboring countries, and their neighboring pairs right now. Would the volatility on them still be high? And do you still trade them regardless, even though the volatility?
We trade them regardless because the CAD is a commodity currency, right? It is a close neighbor, but the U.S. dollar, right, is still the world's reserve currency. So there's different. You'll see volatility on it. It's definitely not like sometimes how you get with the Aussie NZD, right, where it just grinds and consolidates, and it's just a choppy mess. Sometimes you don't know what to do with it. The CAD isn't like that all the time. It's not. You have your situation times where it's just grinding consolidation, but it's nowhere near the Aussie NZD. So it is a tradable pair. When you look at it, see, look, right? When you look at it from a longer term swing perspective, and you zoom out and you look at, right, the dollar, right? That's been on a tear, right? That's been pretty much knocking down everything that stands in his way. You know, that's just a bullish dollar from the weekly. Like if we come back to here, but if you just look at it, you know, look at it from that perspective, and then so look here.
Wow.
Right? That's been on a run. If you're a position trader, you're long the dollar. You're long the dollar. You've been long, right? If you go and you look at the commitment of traders reports, it's long. And it has been for quite some while. You know, you get into your day trades and things like that for faster compounding. But if you're looking at it from a position or a swing perspective, you're long the dollar. You're buying dips on the dollar for the most part. Yeah. It's the dollar versus everybody. You know, and it has been like, look how it took out that high. You know, and people always, you know, as traders, you always look, you know, some folks, hey, we're looking for that big move when the dollar is going to pivot. You want to try to catch that, but people getting torn up all year doing that, right? Getting torn. It's been a rough year for a lot of dollar bears. There are some folks who are, you know, hedged in certain positions to where they are bears, they are dollar bears, and they've been waiting for this turnaround. You know, now they're smart risk managers. You know, they hedge, they diversify and things like that, but they're looking for that ultimate dollar collapse. That huge correction in the dollar is where they're going to make their money. But we just can't get there. Like, look at this last stretch. Dips aren't huge. The corrections aren't huge at all.
That's just being bullish.
Yeah, it's unbelievable. But this is why they say don't bet against the Fed. Don't bet against the Fed, because the Fed has been aggressively hiking rates faster than any other time in history on the dollar. It's been fast, and now so fast that you have all these other countries that had except for Japan, right, which had to hurry up and start hiking rates because it's putting a lot of pressure, right? So those that are native to those countries, that's a lot of pressure on your citizens.
Big, very, very.
You know, when you've got a monster dollar, like if you look at the USD JPY, right, and you come out and you look at it from look at that. All right, clear out all my notes. But look at that run. All right, so it's been pretty unbelievable. All right, so that was your August 1998 high. I took that out, smoked it.
Wow. Cool to revisit it again.
Yeah. So, you know, definitely trade it, right? Does it get a little bit more choppy? Yep. But look, at the end of the day, look at it.
Still got the move.
Still got the move.
Still got the move. That's very, very good. Okay.
Yeah. Yep. Absolutely. Great questions, though. Great questions.
Yeah, because usually, before I came, I always was told, like, until now, that stay away from close related pairs. Any pairs, so you've got the US CAD, and you'd have the GBP, Euro. You know what I mean?
Yep. Yep. Oh, I get it. Oh yeah. Oh yeah.
So
Oh yeah.
now I've come and I've begun to see like any pair where you can, as Casey and yourself said, when you see it, you set the trap.
Yep.
It begins to it begins to make more sense.
Yeah. Absolutely. Absolutely.
Right. You guys absolutely don't shy away from any pair. Everyone gets it.
Yeah. For sure. For sure. I remember back in the day, everybody was because it became popular, especially on YouTube, like golden GJ, right? You hear that? You hear that a lot of times, but when you really learn to frame out the market, you'll see like price action is price action.
Mm.
No matter what the asset class, you just saw us looking at cryptos. It could be Nike stock. Ryan always says it's soybeans. It doesn't matter. It's going to move in waves because you're looking at those footprints, right? The buying and selling habits of people, banks, and institutions all over the world. You're looking at that footprint on the chart in the form of a candlestick. And then that's why you have patterns, right? As humans, we have what? Thoughts, behaviors become patterns. And that's what you're seeing. And it literally does the same thing over and over and over again. And when you learn to tie that together with the fundamentals, right, then you kind of understand, because the fundamentals are going to be that catalyst, right? They're going to be that catalyst. So, yeah. So it's fascinating once that clicks for you, because you're not beholden to one particular pair.
I like that. I like that.
Yeah. So we map them out. We map them out every week. And you'll come out looking at 28 pairs or whatnot, and you may only find, 3 to 5 setups that might be in your sweet spot for the week. And sometimes that's all you need. That's all you need for that particular week. So yeah. So definitely glad to have you here for sure.
Thank you so much. Yeah, man. It's an honor.
Yeah, definitely. Appreciate the feedback. Keep asking questions, man. That's how you shorten the learning curve and compress time frames. And we learn as much as from you guys as you do from us when you ask those questions, because if we don't have an answer, we get to go research it.
Of course.
So and we get better. So it just becomes one big think tank. That's the goal. So appreciate you. Appreciate you. Ryan, anything you want to add to that?
Nothing.
No, that was a great breakdown, bro. It's really about, like you said, understanding the fundamentals of how this moves, and then you'll be able to see that a lot of the things that are out there, it's not actually real.
Yep, for sure. So there's that. Go ahead. I'm sorry.
Benny, I have kind of somewhat of an unrelated question. I kind of missed the fundamental part. I came in late, and my apologies. But I was at the bank today, and they offered me a CD saying that it's the highest rate that's been at 4%. What does that have to do with like fundamental? How can I relate that to that?
4%, because that's coming off the rate hike set the foundation for all of that. Mortgages, right? And you're looking at, like, you see it sets. So when the Feds come in and they raise those rates, that's setting a foundation for all those rates. So they're offering you 4%. That's why, right? So when you look at bonds and things and CDs, right, you're gonna get, so it's those are not as risky, right? Those are pretty much guaranteed when you lock it in as the stock market. So those become attractive, right? Especially if you got some money you could throw into it. Like, think about it. So if you're a big player, man, 4% on 100 grand, 4% on $1 million, right? If I take out a 10-year, right, bond, if I take out a 10-year and I got $1 million, I'm getting 4% a year for 10 years, and the 10th year I get my money back from the government because it's an IOU, and I get the 4%, right? And it's locked in, and it's pretty much guaranteed, because how much more secure can you get than the U.S. government, right? What's the chances of that, the U.S. government defaulting, right? Besides them every so often getting in Congress and acting like 12-year-olds and can't come to an agreement on raising the debt limit, right? Then everybody gets all shook up for a while. But at the end of the day, 4%, can I get a greater return in the stock market? Yes, but when there's fear in the stock market, my first job as an investor is to preserve capital, right? Keep my money safe. So if I can keep my money safe and get 4%, that's attractive to me, right? That's why you saw the bond yields, why people pay attention so much to those bond yields going up, because that's going to attract a lot of capital. I get 4% loaning money to the government. Stock market is crazy. There's a lot of uncertainty. Safe haven, boom, right? I'm gonna park some of my money there. I'm gonna allocate some of my cash flow to those bonds. So it's the same thing with your CD, right? That's 4% on the CD. Lock it in. It's IOU, cool, right? I'll do that. So that's why they're offering that now. But again, the feds are going to set the foundation for all of those rates, student loan rates, and that's why we always say it affects people ignore it, but it affects your everyday life. You know, so wherever you're Netflix and chilling, right? This is what's really going on.
Yeah, that's good. Thank you.
You're welcome. You're welcome. Everything, mortgages, the car loans, you know, student loans, those CDs, bonds, everything is affected by it. That's why all eyes are on the Fed. That's why you got politicians on both sides of the aisle going after the Fed, because the Federal Reserve is supposed to be an independent body, right? Outside of politics, they're supposed to make their own decisions. But you see a lot of mess being thrown their way and pressure. The bullseyes on Jerome Powell, right? Depending on what side of the aisle you're on, right? Because of the inflation, right? So very, very important times. And then of course that sets the stage for the rest of the world, because the dollar is the world's reserve currency. So that's why this report is so big tomorrow. That's why it's so big. So that's the dollar. Again, I want to take a look at the NZD, because that's been a 4-hour swing, 80-20 that we've been waiting on for quite some time, and it's moving steadily, right? So it's come off the lows, right? See how it came out of that zone? So we're out of that zone already, right? Came up 400 pips down to about 249, 250 or so, but we're still not to that target. So that total target to that 382 is 460 or so, depending on wherever you take the trade. But that's a pretty big target, and you can see it's trying to get there. It's grinding because of that strength, and because the dollar has been bouncing around. Now, when the dollar is bouncing around, everything's going to tend to bounce around, right? This associated with the dollar, but you can see that the power in that level and how it's just been grinded to the top, despite having that strength in the dollar that we've had. Still wants to have that correction phase. You're still finding buyers at that low price in that zone, and you can see the push up. Okay, so of course we broke. See if it wants to retest that level at 58.16. Tomorrow's going to be interesting for this, right? To see the type of reaction that we get. All right, and so can't control that. Just know, as we always say, right? There's no technical structure, technical setup that will ever stand in the way of a strong fundamental occurrence. Okay, so whatever ideas that you may have had, you can't be surprised if a major report like CPI data comes out tomorrow, and what you had, your idea that you had, it gets whipped around a bit. You know, you have to be ready for that. So you have to manage your trade accordingly. This has moved up quite a ways, right? If you say, hey, I've had enough, I'm closing out ahead of a big CPI report, don't blame me on that, right? That's a nice pickup there, nice gains on that. So that's what it looks like from the 4. If you come out and you look at the daily, right, you can see where, look, we've got the new AB boundary. That's the reset button. That's the reset button there. Right, and there's that swing that you're seeing on the lower time frame. Okay, that's the swing that you're seeing. But just look overall at the strength in the dollar. Okay, against your commodity, the New Zealand dollar. Okay. Okay. Quick quiz. Those in the group who know, go ahead and tell me #1 commodity for New Zealand. What is it?
Is it dairy?
Dairy. Absolutely. Great job, everybody. Derek, and largest trade partner is who in particular? Who do they trade with a lot?
China?
China, absolutely. The same as Australia. Okay, there you go. Benita, I see it. China, great job. All right. So look at the pressure, right? Look at the pressure. But look at the ABCD waves, right? We push down, 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 up, 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 down, 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 up, up, up. You can't get scared out of trades and positions, right? Because we have to know that. We have to know that the market moves in waves. So this whole time, right, that's been making these corrections. It's just lower lows and lower highs. That's just how price action goes, right? So we'll continue to watch the NZD USD, and of course, right, there's always plays on the lower time frame. So look, doesn't look like much here. This doesn't look like much, too much. But when you link it down and you go down to the 5 minute, right, the market moves in waves. There's an 80-20, came up around at 118, 127 zone, and look at the move, right? So you come off the highs around that area, 5 minute chart, 60 pips, 92 pips, came down to the low 134, right, out of that zone. Very, very powerful way to go about things. Requires patience. You have to wait on your setup, but it's there. It's there. Okay. All right. Tyrone, yep. Derry, absolutely. Great job.
Yeah,
So that's that.
Sorry
What'd
to
you say?
interrupt you. I'm sorry to interrupt you there, and everybody else. I was just thinking, I never knew that New Zealand was actually in charge of dairy.
Yeah. For sure. So
I know CAD was in charge of oil. You had Britain that was in charge of the GBP, which was in charge of silver. But I never knew that.
Yeah, yeah. The GBP silver, a huge financial center, right? That's why when you see the stock market rally, oftentimes we see the pound rally, don't we?
Mm-hmm.
Yeah. We see the pound rally. Last 5 days or so, when the stock market was rallying, and you're seeing all of these stories. Oh, the stock market rallies, this and that, blah 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 blah. You see that, and then you look at the pound, and you're like, well, the pound is rallying too.
My friend, I've been trading for the past 4 years, and I never knew that. I never knew that.
Yeah, I didn't either back in the day, right? And we know with Australia, right, it's iron ore. So if you got a big trade, if you got a big partner like China, that's going to heavily affect you, because what? For the last 2-3 decades, China's been working, expanding their economy, right? Making moves in Africa. That requires what? A lot of steel, a lot of expansion. If you're going to build, you need steel. To make steel, you need what? You need iron ore. Major ingredient to make steel. Hard to make that steel without iron ore. Biggest trade partner is Australia, so they're affected by that. So when you get COVID lockdowns in China, and you look at GDP numbers for China, and they get economic contraction, things like that, that's going to affect the Australian dollar. Right? It's going to affect the Australian dollar. Yeah. So like we always say, we're all connected, whether we like it or not. So much for isolationism, man.
I hear that.
Yeah. They can sell that narrative, but we're connected either way. So that's that. Did I have anything on NZD CAD today? So if you look at this here, right, you see this move. Look at that swing. Okay. And you can see how this is no longer highlighted on this NZD CAD, because why? We got a pullback to an 8.6 retracement. The direct correlation is the 1.18 extension that was hit on that swing. Boom. Okay. And you see the pullback. So now the smaller wave, you can see how what do we have on the smaller wave? AB boundary, shallow retracement, 118, 127 zone. That's an 80-20. We got a reaction. Right? We push back above this 78.83. Right? So we've moved bullish. Okay. Continue to watch the oil price, continue to watch the markets. Right now, we know that typically, if the risk sentiment starts to sour, your commodity currencies typically suffer. right? With the exception of oil from time to time because of what goes on with OPEC and demand, and supply and demand and everything else. So sometimes the CAD can hold his own even in times of risk off. But for the most part, your commodity currencies are going to take a hit. So it'll be interesting to see what this pair does coming off of tomorrow and the market reaction to the CPI data. But from a technical perspective, right, you can see this push up, this move up out of that zone. And you can see it here, right? So as it moves up out of that zone, it's going to do what? It's going to make ABCD waves. And this is where we are now. All right, that's where we are now. So when you come here to the 5, right, look at the swing, right? Smaller the time frame, the smaller the wave. That's how you find your plays. So as crazy and as choppy as it's been, this pair still found a way. AB boundary, 118, 127 zone after a very shallow retracement, meaning what? Less than a 382. You see how this price picked up and moved to the upside, but we didn't get that 382, came back down. Look how it went. It's like a magnet oftentimes, and boom, it tapped that level. Okay, so the 5-minute chart on something like an NZD CAD, right, which isn't a monster mover, right? It's a 40 pip move or so out of that zone. So that worked out. It worked out. Worked out. Any questions there? All right.
No, sir, that was a beautiful move.
It was. Repetition, everybody. And you can see, right? No matter the time frame, you see the same patterns play out when you structure your fibs, right? Okay, you get everything lined up. You can see it. It's playing out. It's repetition. Train your eyes to it because that's what helps you build the confidence, right? That's why we always say to eventually one day become that consistently profitable trader, you have to have a consistent method, right? And how you approach the market every time you turn on your computer screen, every time you jump on your charts, okay? What's going to be your approach? If that's inconsistent, then no doubt, right? You'll be inconsistent as a trader. All right. Takes a while. It does. Nothing, no overnight success in this game. Okay. Our job, we're going to give you the framework. You guys take it and run with it, right? Some people like trading on the daily chart, 4-hour chart. Some people on the 1. Some people say, hey, man, I've got to be in and out. That's my psychology. So they take it down to the 5-minute or the 1-minute, right? But you can see no matter what the time frame, right, you see the same pattern occurring over and over again. All right. So that's that. Take a look at the NZD Swiss. Okay, and we got one here. This is holding up. I don't know what's going to happen with this one, right? Gave us a little reaction off the 5, but we kind of holding up at this support. So it'll be interesting to see if this holds and makes a move to the upside or if we're going to hit this D extension. But it's been pretty much straight down, right? Not a whole lot besides this here. Okay, so we'll see what type of reaction that we get coming off of that level. Like so. If we hit the D extension, we know the game resets. Just simple as that, right? So, but here's the key though, right? If we go and we look at the 4, remember, was that this week, Ryan? Right? We saw that pressing the trend line. See, for the longer swing, see that 61.8? A, B, 80-20, boom, on your 4. Here's your 4-hour swing to the downside. So what you're seeing on the 5 and what you're trying to play is the correction on this leg here, right? So we're looking for this correction here. That's what we're trying to get on the 5, right? And then if it wants to continue down after that, that's okay as long as it hits our target. So that's the correction play. But this is the longer swing. This is your 4-hour. Beautiful. 61.8. Got your downtrend line here. Held. Pushed down. Right? So we know long-term projection on this NZD Swissy could be your 1.618 because we got a 61.8 pullback. That's the projection. That's the AB equals CD. Okay. All right. That's our AB. Okay. equaling that CD. Okay, like that. That's the math. Okay, not magical, just math. So that's the long-term projection if this wants to stay on a downtrend. So what could cause that to happen? Well, CPI report comes out, fears of further tightening, recessionary fears, commodities take a hit, money moves to the safe haven. Right? The Swiss franc is a safe haven currency. Now, well, recently people have been choosing the dollar as a safe haven because of the return, right? How strong the dollar has been. Bonds 4%, right? We just heard CD got offered at 4%. So people are, hey, we can get a return on that. I'm going to put it in the dollar. Whereas with the Swiss franc, I could put it there safe, but the return is limited, right? But the safe haven, the Swiss franc is technically a safe haven, right? So risk off, commodities suffer, you can see that price move down. So we'll continue to watch it. Day trade, try to get the correction. All right, try to get the correction. Now, one thing you can use this level for, 5 minute, 15, 1 minute, is that we have gotten, right, a good sizable move down. So we know when price action moves down, right, it's over 100 pips, at some point it's going to correct. So if you're saying, hey, I'm rolling with the trend to the downside, then guess what? You want to see this price action move to the upside anyway. Why? Because you want a high price to get short. You want to get short, you want a high price. I don't want to short from here. Right? I want to see that price pull back a bit. So either way, I want to see price action move. Whether I'm counter trending with the trend, I want to see price action move and give me a more favorable price to get short. Okay. I want to sell at the highest price possible. And this doesn't necessarily represent that. Questions on the NZD Swissy?
No,
No.
sir.
All right. I wanna take a look at this New Zealand yen. That's moving down already. I'm thinking that's already started to move. I was looking at it a little bit earlier in the day, and I was thinking that this was going to probably try to make a return back to, right, to support at 85.13. I think it might just do that. Here was the original move. Seems like a while ago now, right? AB boundary less than a 382. Look at the break up to the zone, and then it just collapsed, right? But it's been bouncing around ever since then. But look, it's about to take this out. Okay, so this A gets taken out. We'll look for price action to flip the other way. We'll run our fib from the top down to see if we can get an 80-20 going the other way, right? We don't quite have anything yet. It's an A6 that continues to push down. It'll take that A out. So we got some time on that one. Nothing there yet. Nothing there yet on that. So we're just waiting. But you can see, right, it's moving down. It's getting downside pressure. Here's the daily. It's just dancing around, right? It's a point in time where everything was bullish against the yen, right? Huge monetary policy divergence. Okay, zero rates for the yen. More stimulus coming from the yen, from the Bank of Japan, the government saying, hey, we're going to stimulate. Hey, gotta keep the economy going. That's weak on the yen. So we look for further monetary policy divergence. Now, we do see the yen, right, act as a safe haven as well. So you may see some strength, right? Election time, CPI data, recessionary fears. You may see just from regular market flow, which is why they hate to intervene, which they've done it. Was it been twice this year, Ryan?
Yep.
Right. And before that, the last time they had intervened was 1998. So it's something that they don't like to do. They like to let the market play out. But you could see the yen strengthen potentially, depending on what that CPI data comes out. All right, because the yen is a safe haven currency as well. All right, so we'll see. But this one is kind of just bouncing a bit. And maybe it gets back to that support. See what happens there. So that's the New Zealand yen. I did have one I'm looking at earlier. The Aussie yen was setting up, I think. Man, it already set up and pushed down. So that's in the zone, right? We want to pay attention to that. That's strong there. Definitely get your trend line break, a cloud break. All right, you want to see that price start to reverse out of that zone and move up. That was fast. That was pretty quick. All right. We want to see that give us some momentum to the upside on that. That was, no, maybe it wasn't this. There was something on another level. Look at that there. All right. Look at that break here recently. This 4-hour candle. All right. Stochastic oversold. Yeah, so we may see the momentum slow and we get a correction to retest 94.19, maybe. Right? There's 94.19 there at the 236 on this 5-minute. So we can see like how it just, even with the strong momentum, you see how it starts to stall a little bit in that zone. Right? And we preferably would like to see the bulls win that battle and push up back up to, all right, your 236 area. Same thing over and over again. Same play over and over again. Right? Okay. What was that movie? Remember the Titans? Right? Denzel was the coach and he said, right, keep running that split veer. It works like Novocaine. Just give it a while. It'll work. Same thing. Just run it over and over and over again. Run the play. Okay, so there we go. Okay. But that's a lot of downside pressure. So we'll continue to watch that. We get it to hit that D extension, then we just wait for the reset. That's it. All right. That's it. See what happens with that. All right. Any questions on that Aussie yen?
No, sir.
Okay. Okay. I wanted to take a look at, because ahead of tomorrow, right? So we could work our way all the way up to this Aussie dollar. And you can see how this pull right back into our zone. So we know overall on our Aussie dollar, short. Okay. Short. Okay. Just watch the zone for tomorrow. Pull back to a 61.8. It's already fallen off that cliff. Okay. 124 off the 61.8. Following the 80.20. Okay. Stop above the A or above the C, however you like to play it, right? Highest point within the AB boundary is our C. That would be our C for right now. Okay. So you need to place your stop 10, 15 pips above your C or put it above the A, trade smaller, let it float. Okay. But just know this is where we are ahead of CPI data tomorrow on the Aussie dollar.
Do you trade ahead? Well, do you trade ahead before the news happens, or do you do it after?
Well, from a swing trading perspective, right? This trade is already short. It hit my zone. I'm short.
Okay.
Right? You're already in it. You're already in it because from, and then you can manage it from there. So if I'm up, for example, in this setup right here, if I'm up over 100 pips, maybe because I know I've got CPI tomorrow, I want to secure the bag a little bit. So maybe I take half of my trade off.
Yeah.
You know, half a quarter of my trade, maybe 3/4 of the trade, lead a quarter, run it, move, adjust your stop down above your C. So if I start out above my A, maybe I move it down here. Right. Take some of my position off. Because if it runs in my favor, right? CPI data comes out strong for the dollar, recessionary fears come in, hawkish Fed, further tightening ahead, right? Anchor weight is heavy on commodities. Dollar strength will push that down, right? It has the potential to do that. Okay. Lately it's been weird. Sometimes when they break down the data, like we just saw a bear market rally a few days ago, and it's like, what? Like, where is this? oh, well, investors are betting that the Fed's gonna have to pivot. Oh, this is because they're placing bets. All right, okay. So, but if my long-term extension is at the 161.8 based on this correction, all right, then I've got time. So if I take some off the table now, then we understand, right? The market's gonna move in waves. Then if it does push down tomorrow in my favor, at some point, it's gonna pull back. And then I can add back to that position, right?
Mhm.
Or if I get out altogether, okay, the dust is settled, hawkish Fed expected, right? Come December, 75 basis points, strong dollar. Then I'm just gonna wait for a correction because my top-down analysis is telling me I'm short Aussie dollar anyway. I just need to wait for a new high price to get in. Mhm. So yeah, so you can imagine because this is the larger overall move.
Mhm.
So that's the way you can look at it. Right. And then there's another one, right? On the Aussie dollar on the 5, the 80-20 swing. But we know what that represents. That represents price running into that 61.8 zone on that 4, right?
Mhm.
That's the same thing. It just depends on what time frame you want to play it. For price to correct, they had to make up A, B, C, D waves to get to that level. And now you see the rejection, right? Well, here on the 5, that's reflected in the form of 80-20. Boom. So if it's going to continue down, it's going to take my A out. And then it's just going to make waves to the downside. So we'll see. Yeah.
Yeah,
I
thanks for
got
that.
it. You're welcome. You're welcome. We got out the predicting game a long time ago. You never know what's going to happen. I don't trade news at all.
Oh, yeah, I agree. I agree with that. That's why I had to ask the question. But like you said, you're in a good position. So yeah, and also you're swing trading. So that's good. That's very, very good.
Mhm.
Actually, I've got a question. You basically use actually no, I'll ask you after. I'll ask you after. You carry on.
Okay. If you can ask me now.
I can ask you now. Okay, yeah. All right then. So you guys use we use TradingView and you're using live trading charts from Smart Trader. Who is your broker of choice that you use?
We don't really get into recommending brokers because I'm not licensed for that.
Yeah.
I can tell you I've used in the past. I've used Traders Way in the past. US I've used Forex.com. It's 50 to 1 on that. But we always urge everybody to do their own research because I can't really give that type of advice. Not licensed, right? So a lot of times people recommend brokers, but if you're not licensed technically, we try to stick to the rules.
Oh,
You know,
okay.
yeah. So we always urge people to do your research on your brokers because a broker is somebody that a lot of people don't know, you can build a relationship with the representatives of your broker. You can build a relationship with them. So you wanna do just that. Do your own research to make sure that you're comfortable. You know, US brokers are going to have your first in, first out rules. Same with Canada, you know, and their brokers. There's a lot tighter regulation, not as much leverage. So it just depends on who you are as a trader, right? So we always urge people to do their own research on that.
Okay.
Nice
Yeah.
one. You're welcome. You're welcome. I also wanted to take a look at this CAD Swissy. Right? Because you see that's just moving down, right? It's just moving down. But when you look at it from the swing, right, this is one that we've had eyed up. You see how that hit the zone too, right? Hit the zone and it's moving down. So just tells you, right? Oil prices, you're feeling the squeeze. I need to see. So if we look at crude, right? You can see futures held below 86 per barrel on Thursday after losing more than 7% in the past 3 sessions, pressured by a larger than expected build in U.S. crude inventories and China's ongoing battle against the resurgent COVID outbreaks. Official data show that the U.S. crude stockpiles rose by 3.93 million barrels last week, higher than forecast for a 1.36 million barrel build. Meanwhile, fresh COVID outbreaks and top crude importer. See that? Expanding. Top crude importer stoked fears that authorities would be emboldened to stick with the zero COVID policy, dashing hopes for a gradual economic reopening and a rebound in energy demand. It takes energy, right, to run an economy. But if you're all locked up, you don't need it so much. All right. So here, still the supply outlook remained tight as OPEC plus reduced output to about 2 billion barrels, right? We're just 2 million barrels. We were just talking about that a day in November, while the European Union is set to ban Russian crude imports by December 5th and Russian oil products by, that should be February 5th. Okay. So that's a supply that could create a supply shock somewhat. So we'll continue to follow that. That's why you see the oil just bouncing back and forth. That's mixed right there. That whole thing is mixed. All right. So we'll continue to keep an eye on that. All right. So the cash Swiss, look, you see it falling off. All right. Took a dive. All right. Took a dive over 100 pips to the downside there. Okay. Take a look at the one. We can see you had a higher push on your 1 hour just because why? It's a smaller wave. Right, a little bit of a higher push in the zone. But look at it coming down. Okay, back below 73.05. So we're short. Okay, so we look for those corrections. Right, it moves back down. And this is why tomorrow is so important for CPI. All right, so that's the cash Swiss. Any questions?
No.
No. All right. So we look at this. I know I've been tracking this Aussie NZD for a while. I think it's just sitting there, but it's the Aussie NZD. Right? It's trying to make a move. Here's the 80-20 zone. It's just been consolidating back above 109, but we'll continue to watch that. Right? So if it makes the move, okay, that's 100 pips to that 382 off the 1 hour. So not a whole lot there yet, but that's just one to keep your eye on. I know it's kind of pushed down in the feed now from when we originally posted it in the Telegram, but just a reminder to keep your eye on that one. There was one, was it the euro? Yes. All right. So we covered this the other night, last night, I think it was. And you can see how that's moving out of that zone. All right. So see what kind of reaction we're going to get here. This is on a 5 minute. So we'll see what kind of reaction we're going to get here. This is 135.67. All right. Maybe we get a correction in a break, but there's a D extension there. All right. So that one's making good progress. We posted an update on that one in the Telegram. So there's a beautiful double bottom around your 61.8 zone, right in your buy zone there. All right, so that's making good progress. Now, what you guys can also do for these longer swings, right? If you're swing trading, you can use these levels for TP zones. Okay, so let me just draw this up real fast. We'll end it on this because this is very important, especially as you're trying to build that tolerance for holding trades and holding those swings. So if you have, right, ABCD move. Okay. And we wait for that trade to come down into our sweet spot. Okay. For risk to reward, right? 61.8, 786. And we play that traditional put our stop below that A. Okay. We know, right? For this to be an A, it has to be what? Support. Support level. Okay. Like that. We know that the B boundary, because it's going to form a swing high, that's what you have to have. It's going to be a level of resistance. Okay. So when you're playing these swings with the trend, and you come out of your zone, your buy zone, and now we're trying to make, right? So we've got our C. Okay. And now we move into that C to D push zone on the swing. Okay. You can use these levels to reduce your trade. So if you're in, right, you can have take profit zones. Okay. So you can say, I can take it from this C off this 61.8 or this 786, 86, whatever. And I'm going to reduce my trade when I get to the B boundary, right? So that could be a level where you say, you know what? I don't want to hold all of this trade. I'm going to reduce it here. Boom, I take some profit there. Okay. You can take some profit in your 118, 127 zone. We know it's just a strong area where price likes to react, especially if you look back. Okay. Especially if you look back and you see that in the past, right? I look left, right? We all hear that as traders. Look left and you see that, man, that was a future area where price, there was resistance. Well, I think I might take some profit on my position, my swing position there as well, because we know that oftentimes we can get a correction there. We can get a correction here, okay, right, where we move up, okay, and this is where when you get that fight between the bulls and the bears, between your AB boundary, that's where you start to get your harmonics to form, okay, that struggle. So you may say, I want to take some profit there. Maybe not at the B. Maybe I say, hey, my first TP will be at this 127. And then ultimately, okay, my 161.8, my correlating retracement level with my extension level. Okay. So you could take profit all along the way. And a lot of that comes down to trade psychology. Okay. Comes down to that. All right. Because we know that price is not just going to go straight up. It's going to move in waves. All right. It's going to move in waves. That's how it goes. So just something to think about when you're trading. If it helps you to see your account growing as you get into longer swing trades, then don't be afraid to reduce your position. Right. If you're trading a large enough position, right? We can't divide up one micro. Right. So you gotta let that run. You know, but even if I'm trading at 2 micros, 20 cents, maybe I let it run to a level and then I let the remaining 10 cents run and then I move my stop up. Okay, so trade management is also part of your trade plan, right? Okay. All right, so you got your strategy, but then you have, hey, once I've done all of this hard work, how am I going to manage that trade? How am I going to secure profits? How's my stop management going to work? Okay. So those are some things to think about. Ryan, anything that you want to add before we wrap things up?
For newer folks, it's imperative that you guys are going through the training. And going through the training in the order in which we laid it out for you. You'll get mixed up if you bounce around because we set it up. The one skill adds to the next so that you can progressively move through the training and add to the knowledge. So it's imperative that you go through the training in the order in which that is laid out. And don't rush. Don't rush. Take your time, go through the videos, do the homework, mark up the chart as we're going through it so that you can get the practice in. Do the homework after the video, right? Hop into the Facebook group, drop your homework into the Facebook group. We can give you feedback, all right? It's imperative that you do the homework. If you're not applying what you're learning, you're just learning, right? And you got to apply so you can get the practice, so you can get the repetitions. When he said it, repetition is the mother of all skill. If you're not getting the reps in, you're never going to pull the trigger. So you got to practice, right? Also remember that perfection does not exist. You're going to make mistakes, and that's okay. That's how we learn. That's how we learn as people. Benny and I make mistakes every single day. I make hundreds of them a day, right? But you can't be afraid of the mistake, right? You have to seek the challenges and seek the mistakes so that you can learn the lessons so that you can then grow from that mistake. So that you can learn the information, learn the things that are required, right, to achieve that next level. Perfection does not exist. No perfect entries. It's all a fallacy, right? Give yourself some grace, right? Allow yourself to go through this process, right? Don't compare yourself to anybody else. Nobody has lived your life. Nobody's journey is the same as yours. So take it one step at a time. and just seek progress, seek learning this process, right? And then come back to these live sessions and ask the questions that will come, right? You will have questions. So these sessions are designed so that you can ask those, right? It's open forum. No question is a dumb question. Ask the questions, get the feedback, go back, watch the video again, practice some more. That's the cycle. All right. But great session, bro. Great session, man. Appreciate you guys being here.
Appreciate it. And I will piggyback on what you said, right? As far as the rushing, it's so important, right? Because he hit the nail right on the head. Like, you don't rush through it, guys, right? There's a method to the madness. Now, I'm gonna tell you why I rushed through it back in the day, because I had spent a ton of money, and I'm grateful for the mentors that I had, but it was a lot of money, and I needed to rush because I had spent all that money, and that credit card bill was coming, and it was either I needed to get some type of return or I was gonna have to beat my wife to the mailbox. So I'm just so before she got there to see what I had invested, right, in my education. So there's a method to all of this madness where we put a price point at $39.99, right? So you don't get caught in the situations that we got caught in, or you get through a training and you pay the arm and a leg, and you're like, man, I spent all my money training. Now I don't have any money for an account. So you don't have to worry about that. So don't rush, right? Everything is there for you to take your time, for you to learn, because the way we organize it, even though it may seem like it's taking a while, the way it's set up, if you keep showing up for yourself, if you do the work, you get the reps, you ultimately will shorten your learning curve and compress time frames. All right. So I agree with you 100%, Ryan, on the not rushing listing. All right. No need to do that. So with that being said, everybody have a great night. Take care.
Thank you.
You're welcome.
Thank you for that.
Thank you.
You're welcome.